Welcome to class number 4 of Futures Trading for Beginners. Friendly reminder, if you didn't notice on the thumbnail, class 4. So if this is your first video, I'd encourage you to just go down below the video and we'll have the classes listed out there so that you can start at the beginning. That way all this is gonna make the most sense. In this class, I'm going to be talking about, all right, we have all this stuff that you've been learning about. So you know what the futures market is. You know how to read the quote. You know when things expire. You know that there's different, you know what a tick is. You know how these things move. You know how much it costs. You know all about the margin requirements. You have all that stuff. But now we need to take that stuff and move it over to the category of, okay, well, how do I use that to actually make money? How do I use that to start to put some profit into my pocket? And that's what I want to talk about here. Some of the analysis methods out there and the strategies that you can use to begin to apply that knowledge and then really start to see some profits and returns from it. And that also includes broker, what's the best broker selection. So I'm gonna walk you through the process of how you would wanna go about that. But really right now, it's all about just understanding, now that you have the information, what are the kind of methods out there, the strategies that you could now kind of pursue and figure out what way you think would work best for you in order to take the knowledge and then apply it in a real world situation and start to put money into your pocket. So let's get to it. All right, welcome to my desktop here. We are talking about brokers and then how they work together and make you money. But before you make money, there's some other things that you need to stay focused on that'll bring things full circle back to the broker, and we'll get to that as we proceed. So the final cost, think back to class number 3. You now know that online brokerages give you leverage via margin. So you now know all about margin and how that works, and that's one of the roles of an online broker. However, they being online brokers also are the ones who are going to connect you with buyers and sellers of contracts. So it's a situation where you do not need to do that. You don't need to go start knocking on people's doors saying, hey, I have these futures contracts. Would you like to buy them? Or I would like to buy them from you. Nothing like that. They are going to perform that service for you, but they're not going to do it for free. However, it's one of those situations where it's well worth it, right? Who wants to go knocking on people's doors with a box of contracts saying, hey, would you like to buy these from me? So they will do that for you, and they're going to charge you a fee for that. But once again, and you've heard me say this time and time again throughout the course of the previous classes, but technology truly is our friend. So a couple different ideas to get you started, low commission futures brokers, and then, insert the year so you can try to keep that search as relevant as possible. So whatever year you're watching this, throw in that. And then best futures commission, once again, insert the year, but get creative, right? I mean, I'm not saying those are the only 2 search things you can run, but, just take those and, kind of evolve them for whatever you think might give you the best results, but those ones will definitely get you started. So understanding commissions, how does it actually work? So here's a couple different examples out there from just random brokers. I'm not saying you should use any of these, and as always, focus on the process, because these are subject to change at any time. Who knows? By the time I launch this video, maybe they've already changed. So focus on the process, as I've said many times before. But the terminology here to take note of first is this per side. So in these 2 situations, you see per side. What exactly does per side mean? Well, every contract trade, so every time you trade a contract, there's 2 sides to it, right? First, you have to buy it, that's one side, and then you have to sell it, that's the other side. So that would be 2 sides in total, meaning that you need to double the number. So whatever number you see, if you want that total cost, you need to double it, because that's only telling you per side. So to buy, and then you have to sell. So double the number. So in this situation, it's not $1.29. It's actually $2.58. Again, that's just $1.29 multiplied by 2 for 2 sides. Right here, again, that's actually not true. The actual cost is 99 cents. And then you look and see per contract, okay? So what's going on? Is that something different? Because we've seen per side, but what about per contract? And no, that is the exact same thing as per side. So when you're doing your research and looking at the commissions and such, just realize that per side, per contract are the exact same thing. I suppose there could be other different terminologies out there. I didn't come across any, but worst case, if there is a different terminology, make the broker earn that fee, earn that commission. Call them up, use their customer service, because you are paying them, right? They are working for you. So if you're unsure about something, just call them up. But yeah, per side, per contract, that should get you, well ahead in terms of, the terminology out there. So in that situation, because it is the same as per side, once again, got to multiply that by 2 for a total of $3. So let's walk through a little example here. And let's say that our good friend there wants 3 contracts. And I'm just, choosing this one, not because I'm advocating it, but just to give us a baseline to work from. Now remember, per side or per contract, those are the exact same thing. So let's do the calculations here. So how does this work? Well, step 1, we just need to figure out that price per contract, per side, and you want to multiply that by 2, right? Because there's 2 sides per trade, like we just talked about. So just double it by multiplying it by 2. And after you get that number, that's what brings up step number 2, and that is you're going to multiply that by the number of contracts wanted. So to assign some real numbers here, there's $1.29, right? And first we got to multiply that by 2, right? Because there's 2 sides, and that's going to equal $2.58. Now that we have that number, we need to multiply it by the number of contracts that are desired, and in this hypothetical situation, 3 contracts. So that's going to tell us that the entire trade cost from a commission standpoint is $7.74. One thing to note, and just to keep an eye out there, but some online brokers, if you are very active, in fact, the more active you are, some of them will lower your commissions. So in this situation, you can see they map out, the number of contracts that are being traded, and the more you do, the less and less commission per side it becomes. Not all brokers offer that, but might be something that you want to keep in mind when you're doing searching, saying, if I plan on being really, really active, well, then maybe you would want to factor that into your search and see if any brokers offer that. Even if they don't, might still be worth calling up a broker and saying, hey, do you offer any sort of, volume discounts if I do a certain amounts? And you might be able to negotiate. Because remember, the free markets, brokers are competing against other brokers, so they might be willing to work out a deal, even if they don't advertise it on their site, in order to get your business over somebody else's. Now, the key question that you need to be asking, because you don't want any surprises. So I want you to envision it like this. That is you. There is the broker. So this is the question you need to be asking them, preferably under a hot spotlight. If you can arrange that, then that would be the most ideal situation. Find a dark room with, dark and dreary, get the spotlight, and, just get them pretty nervous, and then you ask them this question. Do your advertised commissions include the exchange's fees? Do your advertised commissions include the exchange's fees? Now, I really do respect this broker because it was very straightforward in figuring this out. Other brokers, though, not so easy. Sometimes you have to dig through the fine print and you have to click on a bunch of links. So that's why sometimes it might just be best to call them up, save yourself the time, but whatever you feel most comfortable with. But in this situation, like I said, this broker on the commission and fee page down below the normal pricing had this chart here. And you can see right here, we'll go back to our trusty ES, which has been one of the core examples we've used. But here, there's the exchange fee right there of $1.18, and then another fee right there for 2 cents, which actually brings the total per side to $1.69, which is the real cost. So that's where you, like I said, you got to figure out the real cost, and you have to figure out, is there advertising price including those exchange fees or not? Probably not. But I suppose that there is one that might. So remember, make sure you're comparing apples to apples, because they are really expensive compared to the other one. Well, the reason that they're really expensive is because they're already including those exchange fees in there. So it might not be as expensive as what somebody else that's, advertising a really low rate, because, they're not factoring those in there, and then there's some sort of asterisk and fine print somewhere else. So just be aware that there are other fees that are going to be attached to these, and you'll just have to figure out, if what is being advertised to you is the real cost or not. So what is the best broker for futures trading here? And this is really a 2-ingredient recipe, and the way it breaks down is this. This is kind of the way you have to approach it. You have the importance of commission and fees, right? How important is that to you? And then you have the ability to perform the strategy, because that's what a broker's job is. It is a tool to help you perform a strategy. I mean, if you can't go out there and buy and sell contracts, well, then you're not going to be able to do any sort of strategy, right? And that's where the commission, or that's where the broker comes into play. And then the way I look at it is this, what I would call the opportunity cost curve. So let's break down the different areas of this. So over here, we have a situation where fees are very important because they need to be really low, since the broker is not that good in terms of allowing you to perform the strategy. So if the broker kind of hinders or slows down your ability to perform the strategy, well, then you know what? They better be really, really cheap on the commission side. They better have really, really low fees if they are actually holding you back and hindering you from performing a strategy as, as efficiently as possible. So for example, maybe you're paying $99 instead of $1.50, yet that's causing you to miss out on an opportunity to make $100. So do you see the problem there? Do you see the opportunity cost? Sure, you're saving a little money on commissions, but if because the broker is not allowing you to perform as efficiently and as fastly as possible, I don't think fastly is a word, but you know what I mean, then you know what? It's probably worth it to pay more because you're saving 51 cents, but yet you just missed out on an opportunity to make $100. So that is not a place on the curve that you want to be at. That doesn't make any sense because the opportunity cost is too great. And then you have this area, and this is where fees are very important because they are just too high. And even though that the broker is allowing you to perform the strategy very, very nicely, it does reach a point where it's like, yeah, that's true. The broker is helpful, but wow, those fees are just, they're just too high. So let's say instead of paying, so you pay $3.50 instead of $1.50, yet you could still have the same opportunity. Maybe it's not as pretty, maybe it doesn't look as good, maybe it doesn't just the appeal of it from a visual and eye-catching isn't quite there, but at the end of the day, I mean, it still does operate and it still does give you the same ability as somebody else that pays $1.50. Maybe that $1.50 doesn't look as nice, but you know what? Saving $2 is going to add up over and over and over again. So again, in that situation, all right, the fees are just too much. So what we want and what we need to be looking for is right there, which is the sweet spot. And this is where fees do not matter much because you have a good ability to perform the strategy and profit above the fees. So it's that fine line where, fees are there and they're not the cheapest, but they're at a spot where it's not a problem to overcome those fees because the platform really does, the broker really does allow me to perform a strategy so much more efficiently than what somebody else would. So that's how that really breaks down and what we need to be focused on going forward. However, down there, ability to perform the strategy. Okay, yeah. So strategy first and then the broker. This is where people get it backwards all the time. Hey, what's the best broker? Well, I don't know. What strategy are you using? So let's dig into this and really illustrate why this is so backwards to think. Now, I'm not saying it's illogical. It's actually quite logical to think that, hey, I want to be a futures trader. What's a good broker? But it's backwards. You need to figure out this strategy first. The ability to perform your strategy is the most important part of a broker search. I want to say that again. The ability to perform your strategy is the most important part of a broker search. However, you may be thinking this right now. Wait a second. You first need to determine what strategy you feel most comfortable with and what to use, right? As of right now, I'm talking, hey, you got to have the right strategy. Well, but I don't have a strategy right now. Exactly. So that's why we need to now determine what strategy you would feel most comfortable with. And a strategy, no matter what you use, is built around one primary question. And that question, because before each and every futures trade you ever make, you'll need to ask yourself this: what direction do I believe the contract value will move? Do I think it's going up or down? Do I think it's just going to go sideways? If you cannot answer this question in a logical way, then everything you have previously learned ultimately is worthless because you become a gambler. For the first 3 classes, you've learned a lot, but all that stuff is worthless. If you cannot answer, logically speaking, in a logical way, hey, what direction do I believe the contract value is going to move? Then you're just a gambler, right? I mean, you're literally just saying, I don't know, let's just do this, and you roll the dice. I'm assuming this, though, that you don't want to be a gambler, that you want to treat this seriously, that you want to treat this as a business. So that's why, all right, well, how can we answer that question? How do we go about answering that question so it's logical? Keep in word, not guaranteed. There's no such thing as a guarantee. But in a logical way, how can we answer that key question? Now, good and bad news. The good news here is that there are analysis strategies that, when done properly, of course, can answer the primary question logically. So that's good. It is possible to approach this in a logical manner where it's not, just turns into some sort of dice roll or anything like that. Bad news, though, is that my risk tolerance is not the same as yours, so I don't know which strategy you personally would feel most comfortable with. Now, the point here is I want to map out and walk you through a couple different choices that you can explore and figure out what fits best for you. But yeah, I can't sit there and say you have to do it this way because I am not you and you are not me, and we're going to have different risk tolerances as human beings. But the good news, again, there is a way to go about all this in a logical manner. Now, we want to take our trading to the next level, right? So I'm not contradicting myself, but this is still the most important question. What direction do I believe the contract value will move? However, the key question that separates amateurs from people that do this long term, amateurs from professional traders, however you want to look at it, is this. Is my potential reward worth the risk I am taking? That is part of the logical nature of the original question. Yes, you need to know what direction and you need to have a good idea to logically think through that. But part of that is this reward even worth the risk that I'm taking? So the two analysis strategies that can help us with these questions, and this topic definitely creates quite the, if you've ever done any research, or especially if you get on social media or, message board forums or any sort of variation, I've seen people go back and forth. And I think this perfectly summarizes, I don't know what people are yelling about. It's really not that big of a deal. There's no cause for just rolling around on the ground and throwing haymakers at one another. So let's just put all egos aside because there's no right or wrong answer. Now, of course, I have my opinion. I have which one that I choose to use. But that doesn't mean that I'm right. That doesn't mean that that's the only way because I choose to use it. It just means, what I feel comfortable with out of the couple different choices here. So just realize that there's no right or wrong answer. It's all about you needing to find a strategy that allows for this. What is this? Well, peace of mind. And if you discover peace of mind with one of these, that's what we're after. You're after peace of mind, and that's what is going to carry you long-term for success. So the first type, fundamental analysis. If you just love, economics, accounting, sociology, politics, science, if you love just digging through mounds and mounds of paperwork and doing your research, then hey, you know what? Fundamental analysis may be something that you want to consider. If reading down that list, oh wow, that sounds great. Hey, you know what? Maybe it'll be for you. So how does it work? Well, again, what are we trying to do as traders? We're trying to pinpoint exactly what direction do I believe the contract value will move. So the way the strategy works is the trader focus, of course, the contract value, right? So that brings about, all right, well, what determines the contract value? Nothing fancy there, just good old supply versus demand. The more people want something, the higher the price. The less people want something, the lower the price. The more available of something, right? The more supply, the less the price. The less available, the less supply, the higher the price, right? Just basic supply versus demand. So then that brings me, okay, well, what is influencing the supply and demand? How is all this working? And for a fundamental trader, have fun. Start digging through that paperwork. There are all sorts of ways you can go that is going to help you determine what you believe, how it will, influence that supply and demand. And it's really a very vast sea of ways you could go about, I think this, that, and the other is going to affect demand, and it's going to affect demand in this way, so therefore I need to act in that way. Or, oh wow, because of this, that, and the other, I think supply is going to alter or is going to act in this way, and it's going to alter how demand works in the other way. So therefore, and maybe you're saying, what? No. All right, and that maybe what ours you're saying, yes. Yeah, this is good stuff. Yeah. Hey, you know what? It might be for you. The thing to just always remember is that times change, and you have to adapt because economies, all these sort of things are always changing. All the numbers, they're always changing. It's always changing with fundamental analysis. And I'm not saying that in a bad way. I'm just saying it in a way where, you know what? You need to accept that going in. Is that big old pile of paperwork? It's always changing. It doesn't stay the same. What you learn in that pile of paperwork is going to be different as time moves on. Whereas on the flip side, a little bit different. Technical analysis. So if you are someone that believes a picture is worth 1,000 words, if your style is what you would say is just visual, maybe you like psychology, and I don't mean it in the sense of you sit there and, oh, wow, yeah, I majored in psychology, or I love to read psychology textbooks. I don't mean it in that way. I'll explain more here. But in this world, there's a pile of paperwork. And notice that pile of paperwork is much less because there's just less things going on. In the other one, you have all sorts of science, politics, you got to economics, accounting, you got to follow that stuff. In this, the pile of paperwork is much less because that pile of paperwork is just emotion patterns. That's what's going on here with technical analysis. And that's what I mean by psychology. It's just understanding and visualizing and seeing how people's emotions are in the market. So emotion patterns. So not only is that paperwork smaller, but the nice thing is that people don't change. And so meaning it's not like that paperwork or the pile is always changing, because humans are humans, right? Humans are emotional creatures. Fear, greed, excitement, all those overconfidence, all those things have been around forever. So you learn the emotion patterns, and there's a certain amount of them, and then after that they don't change because humans are humans. Emotions are emotions, and that's what they're based off of. And I like the second part of that quote. They just reveal who they really are. So keep that part in mind as we go through this next part, because you're going to have an idea of who they are under certain circumstances, and then you can take that information and apply it into the future to help you base and make those logical situations. So in this situation, no, nothing changes. Humans are humans. Emotions are emotions. Now, sure, emotions can help, but again, that's where the part goes to. They just reveal who they are, but at the core, they're all the same. So how does this work? Well, again, what direction? That's what we're trying to pinpoint. None of this changes. But now you got to, okay, well, what is influencing the supply and demand? In this situation, it's people's emotions, right? People's emotions, that's the influence here. People are scared. People are excited. People are overconfident. People are fearful. So how do we observe, though, people's emotions? And think back to that quote, about people, they just reveal who they are. Well, we can see who they are under certain circumstances, under certain emotional influences by looking at past history. And I'm sure a quote, I've heard it multiple times, but history tends to repeat itself, says every single history teacher who has ever taught history. But you know what? They're right. History does tend to repeat itself. So sure, emotions might change. Maybe somebody goes from greedy to being fearful, but that doesn't mean that the emotion of greed and fear don't change. It just means that things have, altered in that way. But like I said, they just reveal who they are. So how do you see who they reveal who they are? Well, by looking at past history. And history in the world of technical analysis is all about price and value and then volume. Now, you have to kind of put that, because remember, in stocks, it would be price and volume, because a stock is based with a price, right? But in futures, it's not a price, right? It's points. So the value is just points. So price and value depending on what you're trading, and volume. But that's the other great thing about technical analysis is once you learn it, you can go from trading stocks to futures to options to Forex to cryptocurrency to whatever you want, because all those quote unquote things, all those assets have a price and value, and then there's volume attached with that. But this is what it's all about for technical analysis. Trying to gauge people's emotions, trying to figure out how to best capitalize on how people's emotions have influenced supply and demand, looking back at the past. And past can be a great indicator of the future. Now, I didn't say a guarantee of the future, but if you take and look at how people have acted in the past under certain circumstances, that can provide value going into the future. So which to use? Well, my philosophy is this. Can we just be friends? How about you use both? And I would definitely recommend using both. You get to choose this, though, and this is the choice that'll be up to you. That's all about personal, your risk tolerance and your comfort levels. But I envision it like this. So you're going to have a pilot, and that's going to be your main strategy. And then you're going to have the co-pilot, and that's just going to be an assisting strategy. Now, this is how it could work, and this is how, I would definitely use it in this way. But I'm not saying this is the only way. I'm not saying this is the way it has to be. So this is just one way that it could work, where you have, the pilot and co-pilot working together. So the pilot in this case, let's just say, you know what? I want my main strategy. I want the pilot to be a technical chart. So maybe if you've never seen a technical chart before, again, the value and the volume. So over here, you have the value. So there is a futures chart, and you can see, again, not the prices, but those are the points. And that is the point of the ES. Which we've talked about time and time again. So over there, you have the value, and then over here, we have the volume. So just the amount of contracts that are being traded over different periods of time. And then right here, you have what would be called a trend line, which you can see is going downward. So in other words, the value is going down over time. So from a psychology standpoint, let's just stop and think about this. And a great way to do this is put yourself in those shoes. If you are in something and that something is going down and drifting down and trending down, hence a trend line, those could be called drift lines too, right? If you really want it, because I mean, the price is drifting downwards, but in trading terminology, they'd be known as trending downwards. So therefore it's called a trend line. But yeah, how would you feel, right? You got to imagine, put yourself in these shoes. Wow. How do those people probably feel? They're probably feeling pretty sad. I mean, what they purchased is just going down in value. You probably have some people feeling pretty fearful, pretty worried. I mean, look what is going on there. That would be a pretty rough situation. And this is all before. Well, before what? Well, take notice of that date there. This is the 30th here of October, and this will all make a little bit more sense here. But that is how technical charts are working right now. As the pilot, is you've identified a situation, the situation being, man, people are probably pretty sad. People are probably pretty worried. Now, the co-pilot here, remember, the co-pilot just assisting is that in this situation, they're going to help, they're going to assist by looking into the future. What do I mean by that? Well, they are looking into the future by using fundamental analysis and locating an exact time and date where the main strategy, which is their chart, could see some money-making opportunities. So in this situation, it's just a matter of the co-pilot helping to find an opportunity to maybe make some money. So it's not the co-pilot, it's not the fundamental analysis that's going to necessarily make any money, but it is going to help find the money-making opportunity. And in this situation, and I would definitely always pay attention to this, but one Google search, and there are lots of other things to pay attention to. So like I said, this is not the only way you're supposed to use them together. I'm just using this as an example because it is a good real world case study here. But Federal Reserve calendar. And when you run that, there's going to be all sorts of stuff out there. But from their main site, you can see right here that on Wednesday, October 30th, so remember I pointed out that chart that we were just looking at, that is on Wednesday. But the chart we're looking at so far is before 2 p.m. And 2 p.m. is significant because, well, hey, look, there's a meeting right there. And there's a meeting where when these meetings happen, the markets are paying attention. And when the markets are paying attention, they're going to react right after that meeting. So this is a way to kind of cheat in a sense, in the sense of, hey, you know what? There's going to be some sort of event that takes place at that point. And quote unquote, that point, you're going to know when that is thanks to the co-pilot of fundamental analysis. So going back here, we have the co-pilot, and they've kind of used the crystal ball. Now, the crystal ball in the sense of not to predict the price, because nobody can predict the price, but they have predicted what? An opportunity. It is telling you that, hey, you know what? An opportunity is coming soon because using the calendar, we know that this speech is going to take place. Not only do we know a speech is going to take place, we know the exact time that speech is going to take place. So yeah, coming soon, there is an opportunity. So here we have the chart and looking at all of that with that trend line. And now after that meeting, after that speech has taken place, this is what has ultimately happened right afterwards. So the pilot, though, is all about the opportunity, meaning, all right, thank you, co-pilot, for locating the opportunity. But it's my job now as far as the opportunity about, well, what is the opportunity? How can I take advantage of the opportunity? And that's where in this situation, technical analysis would come into play. So again, I want to really distinct. The co-pilot helped find the opportunity, but the pilot, the main strategy, it's up to that to figure out, well, what is the actual opportunity and how can I benefit? How can I profit from this opportunity? So in this situation, you can see that right there was 2 p.m. Eastern. You look down there at the volume came pouring in. So that's what I mean. Crystal ball. No, it was no shock that all of a sudden volume came in at that point. Now, what direction was the price going to move? Or excuse me, what direction was the value going to move? How was it all going to play out? I mean, nothing's going to tell you that, but at least you knew that it was coming. And then you can see right there in trading jargon, we got the trend line breakout. So now think about it from an emotion standpoint. How do you think people are feeling when you see the price not only going up, but it's just broken out of that downtrend that it had been in? Well, now people are excited. Now people are happy. And that's the psychology. That's what's being revealed here. Technical analysis, technical charts, they're just a story. You're just understanding the story. Before this, oh, wow, the story was pretty bleak and dreary. People are depressed. People are getting sad. They're worried. But then all of a sudden, boom, price goes up, breaks that trend line. And like I said, in trading terminology, this would be a trend line breakout. And then emotions are going to change from there. So that goes to the, okay, well, how can I best take advantage of it? So just to offer a little bit more context, the breakout happened at 337 and half point, went up as high as 30.55, and then do the math. That's a 17.5 point move. Quick reminder, $50 per point, 1750 point move. That was an $875 per contract type opportunity there. That, now people didn't know that it was going up, but people knew that there's going to be some movement, that there was going to be an opportunity because of that fundamental analysis and the calendar by using that. So again, it all boils back to this. What do you want to use to find the opportunity? And then what do you want to use to actually take advantage of the opportunity? So that's what it boils down to: find versus take advantage of. And the key to success in figuring out what your motivation and passion is for. So if you absolutely love digging through research document after research document after research document, then you know, hey, some people might love it. Wow, you want to spend your time doing that? But no, if you absolutely love it and you have a passion for it, then it's a totally good use of your time. For me, I'd rather save time by just looking at the visual and then putting together a trade plan via what I see and not what I think. Sure, I'm going to miss out on some of the move because if you're really good at fundamental analysis and you're like, you know what, I think this is going to happen because of this, and that, well, then you know what, you could get yourself a great entry point and be set up well ahead of somebody like me that's like, you know what, well, let me first see what happens and I'm going to base on what is happening. Well, Clay, you might miss out on the move. Yeah, that's true. I might miss out on some of the move, but at least I know what the move actually is, and then I can trade accordingly with that. Once again, I'm not saying I'm right for doing it this way. I'm not saying it's just a matter of where are your passions, where are your motivations. In some situations, where's your life at? I mean, for me, I am a father of 4 kids, and I just don't have time to be poring over documents. But even if you do have a big fan, I mean, maybe you can still find time for it. I don't know. But there is that, that characteristic of, well, I mean, what's your personal situation life just outside of the market? That might dictate some of this. But for me, I'm more visual. I want to save the time. So that's why I like technical analysis. But it all boils down to this: is the main decision you have to make is how much, because you should be using both. So because you should be using both, then, like I said, it's, well, okay, well, how much of both? So you got to break that down to technical and fundamental analysis. And for me, just to offer up kind of a real world example, it's 90% technical, 10% fundamental. But for you, it's all about, well, what's your motivation? What's your passion for? And that's going to help you dictate how much you should have. There's no right or wrong. I've seen people, have success with both. Both in the sense of 50% technical, 50% fundamental. And I've seen everything across the board. But what I've noticed is, does that person enjoy it? Is there a passion for what they're, spending their time on? And that's going to carry you a long way. So coming back full circle here, we have the how much. So after you determine how much of each you want to use, you're going to know this. And this is the important part. You're going to know how to locate what? Well, that sweet spot. Because once you know what strategy you're using, how the strategy works, how much technical analysis, how much fundamental analysis do you need? Well, that's going to tell you what broker you need. So strategy first, then broker. I'll use myself once again as an example. Given I use 90% technical analysis, what happens if I told you, yeah, you know what, I'm gonna use, because I really like charts, 90% technical analysis. So I signed up for a broker that has really bad technical charts. Wait, what? That doesn't make any sense. Why would you sign up for a broker? Why would you use a broker or a platform that has really bad technical charts when you know that 90% of your strategy is going to be based on the ability of technical charts? That doesn't make any sense. Exactly. But do you see how you realize that doesn't make sense? Because you know up front that your broker, your strategy is going to be heavy in technical charts. So therefore, right off the get-go, it's going to start to eliminate brokers out there and platforms out there where they just either don't have charts or they have really bad charts or what have you. But because you now have the strategy, you're going to start to be able to narrow things down. Now, does that mean you need to go and pay absorbent fees because somebody's got beautiful, beautiful looking charts? Probably not. Now, again, the middle ground. Does that mean you should go and sign up with somebody because they have dirt cheap fees, but their charts are really, really bad? Well, no, that's going too far in the other direction. So, but you're going to have a much better idea of how to locate that sweet spot after you know how much of each you're going to be using And that all starts with the strategy first, then the broker. And once again, I'm not calling anybody stupid for starting off thinking, hey, I want to be a future trader. What broker do I use? What platform do I use? Yeah, I get it. That seems logical, but hopefully now you see that's totally backwards because you got to figure out that strategy first. So here's a mixture of both. And this is, again, I don't want to just throw out here theory. I want to show some real life examples of people that I've worked with and that people I've helped within the community that I offer. But what I found fascinating about MR, Michael is his name, but we all call him MR, is that he'd already been trading and investing for 20 years. So it's one of those situations where whether you're brand new or you're older or you have lots of experience, I mean, what I respect about him is that, you know what, he still admitted, you know what, maybe there's some other ways, maybe there's some other strategies, maybe there's some other methods that I could use to help improve things. So although I've been trading and investing for over 20 years, I can honestly say that being involved in your program has pushed me to do better than I ever thought was possible. So are you ready? Because I want you to look right there. Today I made $51,004 profit on my ES day trade. Hopefully ES, that looks familiar to you. That's just insane. $51,000 profit on an ES day trade. Now, of course, I see a number like that. And MR's a great guy. I mean, he's a fantastic human being. And he's been on the podcast that I offered before. But, you know, when I see that, I'm like, do you have a little bit more maybe context, proof? So he sent me over his broker statement there. And you can see that that was all of his trades for the day. The one thing, though, to note, you know, he's not the perfect trader. None of this is about being perfect. He took losses, but the key thing with those losses, he kept them controlled. He kept them managed. So risk control, very, very important. But if you were to add all that up, that's $51,000 in total. Now, if you want to see the screenshot a little bit closer, or if you want to learn more about his trade plan and what he was thinking, then you can just go to claytrader.com/blog and either run a search for it, or it might be in the right-hand column under popular post. But worst case, just run a search for it, how to make $51,000 in a single day, and it'll bring it up, and you can see more so the details of this. But this is a future trader who's using charts. He learned how to use charts. He was a fundamental guy, going always just fundamentals, and he loved all that stuff. But as I showed, even after 20 years, he thought, hey, thanks, Clay, for showing me a new way, a different way to see the markets, and now he's combining the two, and he's done very, very well with it. So to go back here, he says, you have created a very special place on the internet for like-minded people to come together and help each other grow. I've met many people in your program that I'm proud to call my friends. I've learned a lot from your courses, webinars, videos, and people of the community. So what is he talking about? Well, if you have enjoyed this whole presentation and you would like to learn more about technical analysis, because like I said, that's what I use, then you can go, and I offer an entire training program called the Trading Freedom Pathway. So you can learn more about it at claytrader.com. Take control. There's also a tour that you can see the behind the scenes of, so I'll put a link to that in the description box below, and you can, if you want to take the tour. But like I said, if you enjoyed my teaching style, if you've enjoyed these classes, if you think, you know what, I would like to learn more about technical analysis, I would like to learn more about technical charts, and I like this Clay guy, he seems decent in terms of teaching, I like the way he explains things, then yeah, check it out, take the tour, and see if you'd find any value in it. If not, that's fine too. I wish you all the best. I want you to do what's you feel most comfortable with. If you haven't noticed, that's kind of a common theme, right? The way to have success is you got to do what you feel confident, you feel most comfortable with. So if no, I don't. That's fine too. Like I said, no hard feelings. I just want to make you aware of it, that this does exist. And one final thing, if you're still here and listening, if you haven't clicked it off, that may or may not have been a little tactic here to just make sure that the people that are really, really kind of into this, I want to give a little temporary time period for people to click off, but there is a special offer here that I am willing to give you, and I'm going to give it to you as we go back to me in front of the board. So I'll see you at the board. And there we go. The class is officially over, and I wanted to offer up a big thank you, because if you are still watching this video at this point in the video, I'm assuming that you've gone through the first 3 classes, you've made your way all the way through here. So I really do thank you, but I also wanna offer you up something special, and that is, if you are interested in the Trading Freedom Pathway, then I'm gonna give you $100 off. And for that, just go to the link down below and you're gonna get that automatically applied. And this is not something I do anywhere else on the site. I mean, you're more than welcome to go to claytrader.com and search the site and see if there's another $100 off. There isn't. I'm just simply doing it because I really do thank you for, coming along with me for this long. And, that shows a good sign of dedication. And if you are somebody that's saying, you know what, this whole technical analysis thing, this whole using charts to help answer that question of, what direction do I actually think the futures contract is going to move? I would like to learn more about how to use, the charts and the technical analysis in order to help me make that decision and then help answer that, the next question of, is the reward worth the possible risk? And if you want to do that, and if you want to use me as your guide and your coach or your teacher, or however you want to view me, awesome. Like I said, I'll give you the $100 and you can just, like I said, go to that link below and that'll automatically apply it to you. So again, I thank you for hanging out. I thank you for coming through this journey with me. And if anything else, if you would like for me to make more of these classes maybe in the future, hit that like button down below, subscribe to the channel, and definitely leave a comment. So thank you for hanging out again, and I appreciate you spending your time with me. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.